Good morning, everyone. This is the Ag Yield War Room coming to you live from the heart of the Midwest and streaming all over the world at AgYield.com. I am your marketing manager and favorite backup host, Jack Coakley, filling in for Dan Dempsey today. First off, I want to thank everyone for being here today. It's November 20th, a little foggy here today at the Ag Yield headquarters. First thing, before we get started, want to appreciate everyone for showing up. Thanks again for tuning in, giving us your feedback, giving us your comments. Remember, if you have a question for our team during the live stream, feel free to submit it into the comments section. If you're watching on desktop, that comments section is to your right. If you're watching on your mobile view, why don't you go ahead and click my ugly mug with your finger, and there should be a comment button that goes above my head. You can click that and submit your question. Or if you just want to submit a question for us to respond to in the next episode or tomorrow's session, feel free to send us an email at info@agyield.com. Without further ado, let's get to the nitty gritty. I'm going to kick it over to Jason for some of the overnight market action, and let's start the discussion.
Yeah, sure. Thanks, Jack. Well, overnights we finished stronger. January beans up 11.5, Dees corn up 0.5, and Chicago wheat down a few. Overnight trade actually ended kind of sharply lower in beans, mostly from the news of the new Argentinian president-elect. It's seen, he's a libertarian, so a lot seen as making radical change down in Argentina. That's seen as good for their ag sector. They've been plagued with really high inflation rates down in Argentina. And this new president, seen as coming in and making a lot of changes. There's been a lot of hesitancy from growers down in Argentina to, sell their grain to the market. It's kind of their hedge against inflation. So the initial reaction last night was, okay, this could be really bearish soybeans. That was short-lived. Beans rallied within an hour. They were unchanged and actually ended up higher on the day. It takes a lot of time for these changes to to come into effect. So not surprised to kind of see soybeans rebound off of that. It ran right into a support number 2. It was a big moving average that it touched and kind of rebounded quickly there. So that's what I saw last night. Any other news? We did some export business to Mexico. We sold some corn to Mexico. I don't think that was a surprise. We should continue selling corn to them. And yeah, that's what I got for kind of the morning wires. So
yeah, the only thing I saw too is that the extended forecast from northern Brazil is supposed to be wetter than forecasted, but how weather maps change.
Yeah, so, well, that could add it to some of maybe sell off on the open as well last night. So
yeah, it does seem like the focus is really going to be on South American weather. Still this week we got a shortened holiday week. So I would expect to stay a little bit more on the volatile side. Also, December option expiration for corn and wheat are coming up here on Friday, and we have a holiday right in the middle of there. So there's probably going to be a decent amount of reposition, I think, just over the next couple days here. You got a ton of in the money put coverage, as we've been talking about all week. This can definitely cause some big swings as we kind of get further on here. And also the pattern that we've been talking about too is that the spreads have a tendency to really widen out at this time of year as well. Just because right after option expiration date, we're going to be looking at December 1st notice, and there could be a ton of basis contracts, HTAs, that need to get priced, rolled, or sold. So I think that's going to be some of the bigger potential market movers here. And we do have crop progress today, so we should be finishing up harvest. I don't know if the market's really going to be too focused on that per se. I think more so on maybe the dynamics of repositioning this week. I don't know, unless anybody else got anything to add. I wasn't seeing too much aside from that 104,000 metric tons sold to Mexico that Jason talked about.
Yeah, I mean, we talked about this. I mean, you're going into holiday markets, right? So you're contract, coming off of contract lows in corn, super thin markets. The Argentina election, we talked about it last night. It's a long-term fundamental that could be, positive for their country, maybe bearish some of our markets, but that's a long-term fundamental. It's kind of like oil share, like we talked about, with biodiesel, and those things are hard to trade, day to day here. So, like Jason said, the initial reaction was down, but it's kind of silly. We're on an 80-cent break in 3 days in soybeans. So, at the end of the day, I think we're going to look at those highs that we made last week and think those are going to be really good sales, for anyone that did sell into that. I think if we get an opportunity to get back to those kind of levels, I think that's kind of proven that, $13 new crop beans, $14 old crop beans, probably a good sale. Options are still relatively cheap, so I mean, there's plenty of things to do here. That's the exciting part. So even though we're in holiday markets, we're kind of choppy, volatile. Those create opportunities. So I guess that would be my point here. I think we talked about it a couple of these, a couple of these morning calls last week. Is look at points that make sense to you, put in working orders because the market moves so fast. It's so thin. I mean, like I said, we broke 80 cents, I think, in 3 sessions in soybeans from last night's low till last week's high. So put your orders in.
Well, I think that speaks volumes to the big break, and certainly there were people that were ready, willing to cover some shorts down around the 50-day moving average, and first time down in a heavily short market like our heavily long market, shorts should definitely be willing to cover it. And I agree. I think having a wider view of how thin things can get on an expiration week and holiday doesn't hurt to have some sort of wish orders or price targets in there. We talked about options and a lot of reconciliation as we get towards the end of the week here. I was also going to bring up that there's a really big open interest in the 460 puts. There's almost 31,000 there, and almost 26,000 in the 450 puts. So looking at those, if we should start to bleed out, that'll create probably a sense of urgency for some people that may be short those. So there, and the $5 line certainly has the most open interest. So just kind of things to keep in mind here as we move forward.
Yeah, one of the things we talked about last week was how fast things can change, like fundamentals, and you don't know why or how, and you see how like this Argentina election, for example, very different than they've had, and they're a major player in global crush and global exports of meal and oil, for example, right? So there's just one small example of something that could dramatically change our markets over the next couple of years, right? It's not last night they put meal down $12. They put beans down 12 cents. So again, it's a long-term fundamental, and the markets bought that break, and et cetera, et cetera. But point being is that at any given time, things can change and not the way that we're thinking about them today. And I think that was kind of a small example of, the reason that you have to be diligent here.
Right. A good point. I just wanted to kind of reinforce that, especially in the meats. We've been talking about how tight supplies are for a long time, and how the cycle is, the cycle of herd expansion hasn't really started yet. And all of a sudden we're starting to see more and more supplies start to build, and the futures market has reacted really aggressively to very small changes in supplies. And that psychology has really changed. You've taken feeders almost back down to a lowest level we've seen in a year. And the constant, supplies are tight. They are, but the market's obviously seeing something different to maybe even change that psychology. So we did see the cattle on feed report come out here on Friday, and it was a little bit supportive, even though we did see a placement number, which I think has generally been the focus, especially going off into Q1. The placement number was a little bit less than the market was really anticipating. I think everybody was really hoping, initially to put a higher guess out there just to get this lower placement number. But we're probably going to see a little bit of more friendly price action, hopefully in the cattle. We'll see if it holds or not. So on feed inventory for Nov 1 came in at 102. The market was looking for 102, so that's pretty flat, pretty in line with expectation. With placements, we were expecting about a 107, and they came in at 104. So it's a pretty big change, but still 4% over last year. So that's still it's definitely a friendly report based on the estimates, but longer term, this is going to be a little bit of a headwind, the fact that we're able to place so aggressively going into Q1. Also, marketing number was at 97, and the market was looking for about 98%. So that was still a little bit weaker. So we're placing a lot more aggressively. We're marketing less. I think that just kind of, like you say, these things can change really fast. So we're definitely in the lower end of the range for what we've seen lately. So maybe this can spur a little bit more support and a little bit more confidence that prices can rally here, especially from those who have been aggressively kind of selling into this. So we'll see what the reaction is. Generally, I think it's going to be a little bit more supportive. The cash markets came out definitely lower from the previous week. Right around 179. So, I mean, that's still a focus too, is that nearby cash is still weak. On the hog side of things, just overall, seems like cash should still be on the defensive here, but we got a nice little premium relative to that. So kind of been trending lower lately, but we're right at support, kind of that 40-day moving average support. So not too much news over the weekend there. I think the focus is still really on holiday demand for the time being. So, if anybody else has got any thoughts on the meats, by all means, but that's all I got.
No, I think we're, like we said, we're going to holiday markets, so it's going to be hard to talk about day-to-day moves. It's going to be thin and choppy, and we're going to try to put a fundamental or some big excuse or reason behind every move. And at the end of the day, it's just money moving, end of year, taxes. You never know what motivates people, but that's why these holiday markets can get so squirrely.
Right. Yeah, we are. I think, generally when you're lacking fundamental rationale or anything across the wire, the market's just naturally going to turn to those macros. So we're going to start watching crude and U.S. dollar. U.S. dollar has been on a pretty serious break here. It's, taken about it's about the lowest price since September, the very beginning of September. So, I mean, like I said, running out of things to talk about in our markets, we may start to look a little bit more closer to the macros to kind of justify price action.
Yep.
Well, I think a good adage here to kind of add to that is, you always heard you don't make your year in December, and you get a lot of the depth and liquidity that's had a good year, steps out, steps away. They don't want to mess things up at the end of the year. And then you have people who inadvertently wind up chasing things. And we can get into, potentially expanded ranges, a little more volatility. And I think soybeans seem to be in that camp today. Corn has certainly not been a participant. I think it still has to reconcile some things here as we go through option expiration and we go into the delivery period. A lot of commercials started to roll the March to start bidding off the March. And I think that only magnifies what's going to happen and potentially happen in December corn here in the next 7 to 10 days.
Yeah, I mean, good point, Ben. As a trader, we always talk about not really trading after November, after Thanksgiving. It's just December is such a goofy month. It can make or break your year, which is so weird. And it's just not, especially to have a big position on.
Yep.
So a lot of times you see trend change after Thanksgiving. So you gotta be cautious. If let's say December corn, for example, were to have a big break this week, I mean, you almost can't be short after that. Just as a trader, just things change so much after Thanksgiving, and maybe this does. It's not written in stone, obviously, but to your point, there's just so many people that are wrapping up their year. They don't want it. They're burned out. They don't want to trade, or they've made money as a hedge fund and they're short and they want to take profit and go to the Bahamas. You just don't know mentality of a lot of these people, but there's going to be less participants for sure, in the next 30 days, and you have to be cautious. So it's good. Good point.
Yeah, I kind of thought too, just watching last night's open in soybeans and having what are we looking at, a 27, 26 cent rally, 28 cent rally off the lows, and corn was just lethargic the entire time and managed to pop 3 or 4 cents, but it doesn't want to be involved yet. So I feel like it has a little bit of reconciliation. I would note that processor bids going into December have firmed up a lot in the East from the really steep basis declines. I talked to a local processor on Friday, and they're pretty convinced that harvest is going to wrap up. And they did extend for guys that are sitting out there on some corn that needs to move. You might want to call that last week after Thanksgiving. You might get December type of bids because they think that it's getting ready to get shut down. And they were able to accommodate one of my customers on a 55 under posted bid and paid him 5 under for some last week of November bids. So they're still going to be in there digging out, but in the East, to be able to buy unders after harvest is still a really good deal for them. So if you've got corn that has to move, you might want to make that call and ask for last week of November type of bids. So,
make a good point.
It's looking like we just passed 8:30 today, and so I'll shoot it over to Jason with the opening numbers.
Sure, yeah. It looks like beans are opening up strong, up 15. Dees corn up 1.50 cents, and December wheat, Chicago wheat up 2 1/4.
Thanks, Jason. Well, as Dan would say, any parting shots before we close this one out?
Nope.
No, I think I'm good.
Everybody have a good
Well,
week.
again, guys, I appreciate everyone who attended. Like I said, we try to make these as valuable as possible by making them live. Submit any questions you might have to info@agyield.com. And we'll see you bright and early tomorrow morning, same time, same place. Thank you very much.
Right.
And have a good day.
Thanks, Jack.
Thanks, Jeff.
Take care.